Okay, we're going to go ahead and get started. Thank you for joining this evening's home buying webinar hosted by Provident Credit Union. Our session today should last about an hour with a Q&A session at the end. Throughout our presentation, you'll have a chance to ask questions through the questions pane, and we will address all questions at the end of today's session. Everyone will also receive a copy of the slide deck in about a week. Our first presenter is Norm Whiteman. Norm, would you like to introduce yourself?
Yes, good evening, and thank you so much for joining us tonight. My name is Norm Whiteman. I'm a senior mortgage consultant with Provident Credit Union. I have over 25 years of experience in lending, all types of lending, including the fact that I was able to close thousands of loan transactions for all facets of the real estate. As you can see, I have experience in all aspects and all types of loans. And I try to take every transaction, not trade it as a transaction, but as a relationship, and try to do that through a personal approach to mortgage consulting. But welcome, glad you're here.
And Michael Mendenhall.
Good evening, everyone. Thank you for attending our webinar tonight. My name is Mike Mendenhall. I'm a real estate professional full-time for 45 years, and I've been honored to be brought in to talk about the real estate portion of today's workshop. And we're extremely lucky to have Norm. He's a fabulous, fabulous mortgage consultant. Thank you.
And a little bit about Provident Credit Union. As you can see, we're 108th largest credit union in the United States, and we were formed in 1950. So that means that we're celebrating our 75th anniversary of service. And, we grow and we love, working with our members. And we're headquarters in San Francisco, specifically in the Redwood Shores in the peninsula. And, Provident is a great lender and a great company, and look forward to working with everybody. Why choose Provident? Well, I'll let you read that, some of the accolades that we received, and one which is not on here that was recently bestowed on us is that Newsweek voted Provident Credit Union as one of the best credit unions in the United States. So that's at pretty high praise, and we try every day to make sure that we uphold that accolade. So anyway, thanks. Our goal is understanding the mortgage financing choices that you have, help you define your ownership objectives and how to achieve them, demonstrate how you can buy a home for a best price and most favorable terms. And Mike is excellent at doing that, and you'll show step-by-step process how that works, and also help you understand what to expect when you make an offer, when your offer, is accepted. Mike, why don't you talk to this one?
Okay. All right, the steps to successful home ownership. This is actually the stepping stones we're going to be going through this evening. First one, and congratulations, you're educating yourself about home buying. And if anybody would like information based on a geographic location anywhere in the United States, I will be able to look up and recommend a book for you no matter where you're moving to, because real estate is practiced a bit different in every geographic location. First thing you're going to do is apply and obtain a full pre-approval from Norm. As a professional real estate agent, I can tell you we are not able to assist anyone who does not meet with us after having their pre-approval, because they need to know exactly what they're comfortable affording and what they can afford. So it's really important you have that pre-approval. Next, summarize costs. We're going to talk about all the costs associated in the transaction other than the down payment. So we'll go through a little net sheet tonight. How to work with a professional real estate agent, what we bring to the table. I think you'll find that becomes evident as we go through tonight's webinar. Building your home search. We're going to talk about building an effective home search filter, which is an excellent educational tool, especially for first-time home buyers. Because what you want in the very beginning is quite often different where you end up, where you purchase. And it's really important to have that search running, and you can change it as your needs and desires change. Next part is finding a home. Two parts to finding the home. First one is understanding the value of the property, not the list price, but what the value of the home is. And your agent will help you do that. Second part of finding a home is knowing the condition of the home. There's a lot of inspections. We're going to talk about those tonight. We're going to talk about how valuable those are. So you'll need to prepare yourself for that. Next, how do we make an offer? We'll quickly go through that. Thank you.
And then home buying steps. These are basic outline of what we you can expect. You should prepare your financial assets so that you have enough funds for down payment, for closing costs, and a thing called reserves of 2 to 6 months of total payments. And total payments represent what your monthly mortgage payment would be, whether it's principal and interest, 1/12 of real estate taxes, 1/12 of homeowners insurance and mortgage insurance, if indeed that's necessary. And then also, if you're buying a condo or townhome, you also have homeowners association dues. So you have to make sure that you have those reserves in place. We'll talk a little bit more about that a little bit later. Select a realtor. Mike is the best. Expect 30 days to close. However, more likely it's going to be less than that. Usually it's around 21 to 25 days. Sometimes it can be done in 10 days. And then, like Mike had mentioned, you need to get a pre-approval. You need to make sure you shop for what you're within your means. So you may be approved for a certain amount per month, but you may want to be more comfortable with it, not have to eat top ramen to buy a home. So that's also part of the pre-approval process. Next. Speaking of the pre-approval process, here's the 4 C's. So when I got into this business many years ago, I was told, there's basically 4 aspects about mortgage lending that you should really understand, and I think it's important you should understand too. You need to have the capacity. That's the ability to make payments, which is not only your mortgage payment but other debt obligations, and that comes in the way of income. So we underwrite people that have salary, bonuses, commissions, and RSUs, or restricted stock units. And by the way, we use 100% of those as long as you've received them for the last 2 years, and we'll continue to do for the next 3 years. We also lend to self-employed folks that are in Schedule C or LLCs or corporations. And then other income that we use and will use is rental income, alimony, child support, and distributions from retirement accounts. And then the second C is capital. It's having the money for the down payment, for the closing costs, and those reserve requirements. And that typically is checking, savings, CDs, money markets, mutual funds, retirement funds, stock accounts, overseas accounts, as long as they are with a large bank, financial institution, and they're denominated in US dollars, and then gift funds. And gift funds can come from mother, father, brother, sister, distant, not distant, but close relatives to you. And then the third part of that is collateral, the third C, and that's the property. That's the value of the property. That's really important because that's going to dictate what you'll be able to, to buy, and what the contract and the appraisal value can be. And that we look with the type of collateral that will lend in is single family residence, condominiums, townhomes, 2, 3, or 4, 3 or 4 units. And then the value, as I say, is substantiated by the appraisal. And so I haven't seen this happen in a few years, but we lend on what's the lowest of the contract price on a purchase transaction and the appraised value. And so the last 3 years or more, I have never seen an appraisal be less than what the contract price is. And also the type of, whether it's an owner-occupied or investment property, will have an effect on the loan programs, the interest rates, and the fees. And the last C is credit. That's credit scores. It's looking at credit. We work and we use all 3 bureaus, the Experian, Equifax, and TransUnion. What we will do is, if there's one borrower, we'll take the middle score, and that be the representative score. If there's 2 borrowers, we look at all 3 scores for each of the borrowers, take the middle score, and we take the lower of the 2. Next page. Pre-approval elements, again, more of what we look at when we underwrite, look at loans and qualifications. Loan to value. What loan to value is what the loan is compared to the appraised value or purchase price. Debt to income ratios. That's a way that we could determine what the affordability is in terms of your monthly income and expenses. The debt to income ratio is a percentage of the gross monthly income, and that includes what your monthly mortgage payment will be with principal, interest, taxes, insurance, and mortgage insurance and HOA when applicable. And we divide that by your gross monthly income. And so the ranges of those depends on the type of programs. They can range anywhere from 40% of your gross income for debt and to 45%. By the way, the debt also includes any other obligations, student loan, whatever shows up in the credit report, student loans, other car loans, anything of that, credit cards, those sort of items. The property type is important, as we kind of talked about a little bit ago. Single family townhomes, condos, condominiums, both condos and townhomes have what's called HOAs or homeowners in association, and dues are part of the monthly payment. And then reserves, as we mentioned before, reserves have liquid funds after you pay the down payment, the closing cost. You'd have to have monies left over for reserve requirements, and those can be anywhere from 2 to 6 to 9 months, depending upon the type of loan and the loan to value of the loan. And case in point is what happened in 2020 with the pandemic, where people lost their jobs and or were furloughed, and Provident didn't have any issues whatsoever because of our reserve requirements. So that's good for you as the borrower, but also good for Provident Credit Union. Next. Okay, this is what not to do. And this, we sometimes run into this when people, and I'm always communicate this up front is, don't buy a car if you're in the process, or get any other loans. Don't, co-sign for anybody else. Don't miss any payments on credit cards or any other loans. If you do have a 30-day late on a credit card, that'll hit your credit score probably about, 70 or 80, even 90 points, which could change your ability to qualify for loan. Don't change jobs, although it does happen. We are in a dynamic job market here in the Bay Area. As long as it's within the same type of job, usually we can just get a copy of the offer letter and then one payment or one pay stub showing that you're making what you say you're going to be making, and then and don't move money around. What that means is that when you fill out an application, you give us all a list of all your assets. We need to make sure what monies you have and what accounts. And the worst thing that can happen, and it does happen, and I had this happen to me last month, is somebody transferred money from an account that they had shown us to an account that we didn't have. And so it created a problem at the end and delayed the funding of the loan at the last minute. So anyway, it's important to leave your money alone and try to transfer whatever you're going to transfer and go forward that way. Okay. Types of mortgages that we originate at Provident Credit Union. We do conventional products, also called agency, Freddie Mac, Fannie Mae. We'll do 10-year, 15-year, 30-year, and 20-year term pay limits. Here's the loan limits for the Bay Area. Conforming loan limit, you'll hear that term, is 806,500. Super conforming is that between the 806,500 to 1.209 to 210. Anything above that is called a jumbo. 2 to 4 unit loan limits are higher. And also we have a portfolio program called the 5-5 loan program. We have both a 30-year and a 40-year term. And I would say probably 95% of our originations right now is because of that program, because the interest rates on that is minimally 1 to 1.25 3% lower than what a conforming loan amount is, or what an agency rate is. We also originate fixed rate seconds and home equity lines of credit. Some of the unique mortgage programs that we talked about at the 5.5, it's also called a movable mortgage feature, and has movable, meaning you can move the mortgage after you say you use it to buy a property, you decide to sell the property. Within a 90-day period, you can move that mortgage to a new property within California. It's not as much, it's not as prevalent now as it was back when the rates were at 3 and 4%. And I've had a number of people this year have moved to other areas of California, have taken that mortgage and added it and included it on a new purchase, and it blends. The blended rate is below market rate, so it's a great program. As I said, 5.5 is a 30-year and a 40-year amortized loan. It's fixed for 5 years, and it's subject to change every 5 years over the life, not only the 30-year but also the 40-year term, depending upon which one you take. So it's kind of a unique, and the rates on those are pretty competitive. I would say we're probably on the upper end of being competitive, and so consequently, that's why a lot of people like to use that particular loan. We also have a program called a Home Purchase Advantage program, which is a low down payment. We can do loans up to $2.5 million. For instance, you can put 3% down and get $1 million loan, or basically buy a home for $1.30 million. And so what that does is it gives you the opportunity to have somebody else basically leverage your purchase. And you will have mortgage insurance, but we work with 3 mortgage insurance companies, and we have preferred rates with them. So it's kind of a surprise what minimum down payments can do, and the amount of mortgage insurance that you won't pay, what you do pay, but as it compares to what your down payment would be if you put money into it. So for example, if you have $1 million loan and your mortgage insurance is about $200 a month, you could save $100,000 to $200,000, depending upon what that loan amount is, and you would only pay $200 to save $100 to $150, $200,000. So it's a good program. Our planned development loan, it's on new construction. We reduce our closing costs. Our lender closing costs are $1,400. We deduct $995 from those costs if it's new construction. So it's a real benefit for anybody buying that type of property. Okay. Rate locks. So a little bit about what a rate lock is. It protects you. It's an interest rate protection. At the time if you get in a contract and we send out initial disclosures, we can lock in your interest rate at whatever it is at that time. With our 5.5 program, which is that we don't do it on our fixed rate programs, but our 5.5 program, if you lock in the interest rate, let's say it's 7.75%, and our rates drop over the period from you lock it to the close of escrow, then we will float down that rate. So it's a pretty cool benefit that we have with the 5.5. But that like the rate lock, as it says there, is we lock in the rate to kind of hedge you against any increases in interest rates. And then here it talks about the interest rate float down that we do during the lock period. Okay. Monthly payments, as we indicate, we've talked about. Basically, it's loan principal, the loan interest, 1/12 of real estate taxes, 1/12 of homeowners insurance, mortgage insurance if applicable, and then also homeowners association dues where applicable. And basically, the verbiage below talks about having an impound account. What an impound account is that you set up the account at the time you close, and the amount of that impound account will be determined by the first payment date of your new loan. And it's required if you put 10% down or less, and anything 11% or more you put down, then you won't have to set up an impound account for taxes and insurance, but you always will for mortgage insurance. But basically, that account is set up. You put money into that at the time you close, and every month you pay between your principal and interest. You'll pay 1/12 of taxes, which will go to that account. 1/12 will go to insurance, and then mortgage insurance will go there. The reason people set that up is because real estate taxes in California are due on two installments. First installment is November 1st. The second installment is February 1st. And so, there could be a big chunk of money at each one of those two intervals, unless you have an impound account, and that's kind of help you along that way. And then also the impound account will assist in paying your next. So you have to pay your first year's installment of insurance premiums, but you want to make sure there's enough money in there to pay your 2026 impound account. Impound accounts are great to have. I've always done it because it's just, it's a discipline thing. And back to the taxes, taxes, first installment is due November 1st, delinquent December 10th around the holidays. The second installment is due February 1st. Second installment is February 1st, and delinquent April 10th around tax time. So, it's probably good to have an impound account if you have issues during that period of time. Anything else? And there you go, Mike.
All right. Thank you, Norm. Okay, so what we have here is a buyer's estimate of closing costs. Before I start to go through it, I want to point out that think back to the last time you bought a car. With that car, you had your down payment and financing, unless you paid cash. But you also, whether you pay cash or finance, you're going to have a bunch of additional fees. You've got taxes, licensing also. It really adds up quickly. Same thing with buying a home, okay? So in the state of California, we have what's called customary closing costs, which means county to county, what may be a buyer's fee in one county could be the seller's fee in another county. So this is a, quote, fictitious estimate of closing costs. If anybody would like to know who pays what in the counties that you're looking in, just shoot me an email and I'll send it out to you, okay? So in our example here, we have a sales price of $1 million, a mortgage of $800,000, 20% down. Loan application fee, Norm's going to pay that, so you're good there. Lender fee, flat $995, and Norm talked about some possible discounts there, depending on what type of financing. Loan origination fee, points. Sometimes points are optional. A point is 1% of your mortgage amount. Okay, if you're opting to pay a point, most often it's to buy the rate down, and it may not be a full point, it may be a portion of a point, it could be over a point. That's a discussion to have with Norm to figure out whether or not it makes sense for you. Tax service fee, make sure your taxes are paid on time, $119. Credit report, $55 per person. Appraisal fee, $700. Now it could be $700, it could be $2,000. It really depends where and what type of property. But $700 is kind of a ballpark figure. Hazard fire insurance. As you know, in the state of California, we're having issues with getting insurance in areas that are prone to wildfires. So always check with your insurance carrier, giving them the address of the property, and they'll check for you so that you know if you're getting into an area where insurance may be too expensive, you might want to opt for a new location. PMI, private mortgage insurance, Nora mentioned that. Okay, so if you have 20% down or more, you don't have the PMI. But also, Norm pointed out that the cost for PMI has really come down. So it's not like it used to be. Impound accounts. Norm just finished up about that. I agree with him completely. I make an impound account payment to the lender and let the lender dole out those fees as they come due. 2 one-time insurance policies. CLTA, that's to protect the title of the property for you. It's a one-time fee, and it's an insurance program that if you have an issue in the future where somehow your title becomes clouded simply means it's not clean, then they will handle it. Now, what an example of that? Well, if someone came along after you close escrow and said they have interest in the property, that means they had partial ownership or a document showing some ownership. So it could be a lot of things, but it's a one-time fee. The second one is the Alta title, which insures the lender because the lender, after all, is loaning money. So they have interest in the property. So they also are insured. Then we have the escrow fee. So the same company that provides the title insurance in Northern California also provides the escrow. Escrow means the paperwork. So there's a flat fee depending on the sales price of the home. In this case, $1,200. Recording notary fees to get yourself recorded and notarized, $300. Inspections, the most common inspections, and they're usually paid for by the seller, but not always, are termite inspection, looking at dry rot, wet rot, pest infestation, and plumbing leaks. Roof inspection, looking at the condition of the roof and what is the remaining life expectancy of the roof. Property inspection, my favorite inspection. The property inspector, he or she goes through the entire property from the top of the chimney to the crawl space under the home. They open and close, turn on and off, and test everything. It's not destructive testing. They're not making holes in walls, but they're doing everything they can visually. Miscellaneous charges, again, differ in each county. In this city, it's $1,650 transfer tax. In this county, it's $1,100. Prepaid interest. So we use a 30-day month, and let's say you're closing on the 15th day, which means you will have 15 days of interest to pay to the end of that month. Grand total, $12,701 to close this home in this fictitious city and county. Okay? All right, so I talked earlier on about building your home search. When I sit down and talk to a buyer, it doesn't matter if they're a first-time home buyer or this is the seventh home they've bought. I need to understand what they're trying to achieve. So the first question at the very top is the number of years you plan on occupying the home. Sometimes that's really difficult, especially for first-time home buyers. They think, I don't know, maybe 5 years. If I say, okay, you know what, we're going to use that, 5, I'm going to write the number 5 at the top of this paper so that as I go through and ask the questions, I realize that it has to fit their needs for 5 years. So if you take the first one on the left, bedrooms, I'm going to say, how many bedrooms, and I move to the right, do you require for 5 years? How many you desire? What are you neutral about? What's a negative? I don't want that many. So that every part of the question, every question I go through here is going to have a require, desire, neutral, and don't want. The beauty of this is that when it's filled out and we have our weekly or bi-weekly discussion to talk about, do we need to change the search at all? And it can be geographically important. In other words, yeah, let's not use that city anymore. We didn't like it, so we'll take that one out. Or we've decided we don't need a family room because that's keeping us from getting a home in too many cities. So we can adjust the search. So we're educating ourselves on what we require, desire, neutral, and don't want for all parts of the home. If you go down further, you're going to see appliances and systems like oven range. That little question right there refers to the kitchen, and we might spend 15 minutes on what's important in a kitchen to them. So I might say, do you like gas? Do you like electric? Do you like induction ovens and ranges? How many burners? And do you guys like to cook? Oh, yeah, we like to bake. Well, you're going to need a lot of counter space. So we talk about that. So it's not so simple. Some of these questions develop into mini questions, and I'm taking a lot of notes. Type of heating, air, gas, oil, electric. People have allergies. That's something you want to talk about, the different ways the air is conditioned in the property. Washer, dryer, really important to condo and townhome buyers because not all condos and townhomes, the older ones, have washers and dryers. They might have community wash and dry facilities. You might not like that, but you love this particular condo or townhome. We'll find out if you can't install one, if it's possible, if the HOA will allow it, etc. Okay? All right, second part here, roof. So let's talk about those inspections. Remember, we're going to get a roof inspection. So we have a roof inspection on a single family home, and we're going to live there 5 years. So what would we require? We will require hopefully 10 or more years, so you don't have to remaining life on the roof, so you don't have to put a new one on. Desire, be great if it was brand new. Neutral, if it's going to last way longer, then, don't care. Negative, don't want 5 years or less. Because then you're going to have that big ticket expensive item of putting on a new roof for the new buyer. And then these are preferences, types of siding, if you have stucco, stone, wood, whatever. Fenced yards, how big a yard do you need? We'll talk about that and how you'll use it because dirt is very, very expensive in the Bay Area. Frontages, how much lawn do you want out front? Do you like the newer homes that are closer to the street so you have a bigger backyard, that sort of stuff. Pool, I have pool here simply because It's a question where if I'm in front of a live audience and it's 100 people and I say, how many of you would like a pool in your backyard? I'd be floored if there was more than two or three. Most people do not want pools. And the number one reason, it takes up the backyard. Second reason, they're dangerous. Third reason, water shortage. So I understand that. So if so many people don't want pools, you should look at houses with pools because they sell for less. I sell houses every year, multiple houses with pools that the buyers take out right away. But the money they save on the purchase price is good. And sometimes we don't even go up against another buyer because pools are generally just not liked anymore. And if you want a pool, congratulations, you're getting the house for less and a pool. Neighborhood, anything you personally want to know about the neighborhood? Architectural styles, what type do you like? I can tell you the neighborhoods where you can find those. Price ranges you're comfortable with. HOA, any HOA, whether it's on a single family home, condo, or a townhome, we're going to review in detail and explain it to you. Commuting times, I like to ask where you work, where you play, where you worship, where's your relatives. In other words, where do you go on a regular basis? And we want to try and find an area that's in the middle of all that so that commuting times are a lot less. Okay? Types of homes. Most of you listening this evening are probably thinking of either a single family home or a townhome or condo. So single family home, it says shares no common walls. There's actually a home out there called an attached single family home. It's like a duplex, and the difference is there's a buyer or owner for each side of the duplex. Usually a duplex, you own both sides. Well, you're just buying one side. It's called an attached single family home, but usually it shares no common walls. Generally includes front and rear yards, although for the last 10 years, I've been selling quite a few brand new single family homes that don't have front or rear yards to speak of. And maybe there's a little side fenced in area for garbage cans and bicycles. But usually older ones will have big yards. Owner responsible for maintenance of property inside and outside. Owner pays all insurance costs on the property. So what are we saying? That the owner is the foreman of the ranch. You're going to run it, you're going to maintain it, you're going to repair it, or you're going to pay someone to do it. So if you're taking on a single family home, realize you're responsible for everything. Unlike townhomes and condos on the right, or what we like to call CIDs, common interest developments. They share common walls, monthly homeowner association fees. The HOA fee covers exterior grounds and building maintenance. Okay, that's for the exterior hallways if there's interior hallways, but you're responsible for the inside of your unit. The HOA generally pays for the master insurance coverage. And before you buy, review the financial health of the HOA. Okay, so what we're saying here is most of these developments and HOAs, they'll pretty much cover everything. Some noted exceptions to watch out for. Do they cover the balconies? Okay. Do they cover exterior doors or windows? Generally not, but you want to check. Okay. All right, where does the inventory come from that goes onto our multiple listing service? First one, foreclosures. These are lender-owned properties. They've been taken back from a seller for whatever reason who could not make the payment. There's a lot of special forms involved, so make sure you have an experienced realtor for these. Also, there's a myth out there that foreclosures are fantastic deals. No, they might be, that particular house might be, but it also could be someone just selling their home. They're no different. There are some that are overpriced, some that are priced where they're going to sell, and some that are priced below. So just a property for sale. Underneath that is corporate transfer. Love corporate transfers. This is where a corporation transfers usually a promotion for one of the employees and they're moving them to a new location. And so the company says, you need to get there right now. Here's some money. We're going to give you the value of your home is what an appraiser tells us, and we're going to send you off to the new location and you can buy your new property. And if your house ends up selling for more, we will give you that difference. So that's what goes on there. But the cool thing is generally the people that are getting promoted and sent somewhere else are getting paid well already. And what they've done is updated their 65-year-old home in the Bay Area with new kitchen, new bathrooms, new windows over the last 5 years that they've been living there. So they can be in super good condition. These happen generally September through December. So that's when you want to watch for them. And that's the months that they usually are transferred. Okay, top right, probates, anything to do with the legal system of the state of California, whether it's a divorce, a death, whatever it is, if the court system's involved, it is a probate. There are so many different types of probates. We could have an entire class on probates. Court approval, that's the big one. A lot of times the courts are involved and they must approve the sale. This one, you're dealing with a lot of attorneys and the legal system of the state of California, and I would advise you to have a very experienced realtor representing you in any probate. Conventional listing, this is the most common. Just anyone moving up or down. Their family got bigger, we need a bigger place. Their family got smaller, we need a smaller place. That sort of thing. Okay? Okay, so we built that home search. The email home tour is going to come to you 7 days a week, 24 hours a day. And if a property is sent to you and you go, it's too expensive for that property, and you say delete, if they have a price reduction, it will come back to you. So a change in terms means you'll get that again. But what you want to look at is up on the top right. And the top right is just the down and dirty details of the property. Number of bedrooms, number of baths, full and partial, approximate building square foot. And the realist on that side is telling you where they're getting that information from. Doesn't guarantee it. Approximate lot size, approximate acres, we don't care about. Age, year built, 71 years old. And then we have DOM, days on market. Days on market mean how many times, how long has it been consistently on the MLS? And then walk score. Walk score is a cool feature. You click on that number and it tells you how many things are around you that are walkable. Is there a Starbucks? Is there a grocery store? Is there a park? 71 is a pretty good rating. Okay. Now, if you scroll down to the public comments at the very bottom, you're going to see what the seller has approved this agent to print, put on the web, hand out flyers. This is the information that they will allow. Now, we can read all this. And this agent was actually pretty good. If you look about halfway down, it says third bedroom in parentheses without permit. Okay, that means that third bedroom will not be counted. This is a 2 bedroom, 1 bath home. Okay, at least they were nice to say it's not permitted. A lot of agents don't put that in there. So it's your agent's job to check the permit status, to understand the square footage of the lot and the home, etc. Our job is to go ahead and verify all that information. Okay? All right, so in those public comments that were on the listing, here's some things that pop up on a regular basis, and I want you to be careful of on the left and what to look for on the right. I want you to be cautious of the following verbiage. All the property needs is a little TLC. Well, that's great, but you'll find 99% of the time when you get to the property, it's way beyond TLC. Okay, I'm sure most people are thinking, oh, paint, carpet, that sort of thing. It'll be a lot more than that. I rarely see anything in halfway decent shape when it says TLC. Next one, great for first-time home buyer or investor. That one pops up quite a bit. So let's say it's like a 60, 70-year-old home in the Bay Area. It has been maintained, but it's very dated. It's never had a new kitchen put in, never had new baths, very dated, but in good shape. So the first-time home buyer might look at that and say, hey, I'll buy that. And then I will slowly update the kitchen and the bathroom so that when I sell it in the future, I'll make more money. It's a good plan. Or the investor. Well, the investor's plan is kind of the same, but approached differently. The investor buys it now, rents it for 10 years, then has the tenants leave, completely renovates the home, and sells it. So you'll see that quite a bit. Next two are almost always cash only. Contractor special, fixer upper. And the reason they're cash only is because they're in such horrible shape, the appraiser will point out this home is not livable. And if it doesn't pass health and safety certification, no loan. So those ones, if you have a lot of cash, great deal. And you can fix it up yourself, but if you don't, probably avoid them. On the right, look for these words: recently remodeled, new, renovated, move-in condition. That means the houses have been updated. You may not like the floor plan or what they've done, but should be in good shape. Okay? All right, now you're ready to buy. You've been looking around for, who knows, maybe a month, 2, 3 months, and you've learned the neighborhoods, you've changed your search criteria, you know exactly what you want, okay, and where you want it and what your max purchase price should be. So at this point, you start looking at homes 24 hours a day, 7 days a week. What that means is, as the really good ones come on, because you won't be seeing as many homes now because you're very specific about what you want, you need to get out there and see them right away. Real estate is a 24-hour a day, 7 days a week business. So you need to get out before work, after work, on your lunch break, whatever it takes to see properties. View the listings as soon as possible. Try to meet the owners of the homes you view. More and more people are starting to stay in their property now while the homes are on the market. It's kind of going slowly back to the way it used to be. Since COVID, most of them are vacant. So if the owners are there, try and meet them. Introduce yourself. The reason for this is sellers like to know who's buying their house. Most times, if they get 5 offers, they've never met a single person. It's just name on a piece of paper. If you can meet them, do it. When you're in the property, you do have inspections, but look in, under, and over when viewing a home. Take your time, really check it out, really get a feel for the floor plan. Most of the houses now are going to ask you to remove your shoes before entering a home. They will have a basket with those booties by the front door. They get disgusting after one open house, and nobody seems to get new ones. So if I were you, I recommend to all my buyers slip on, slip off shoes and socks that you're not afraid to put holes in walking around. Okay. Do not bring a crowd when viewing. Okay. When you see a home for the first time, it should be you and your realtor. Bring family, friends, coworkers, whatever on a second or third visit, not the initial visit. It gets very distracting. Okay. Okay, when you're in the home, please don't make negative comments about the home you're viewing. The reason I have that in there is the use of cameras in properties now is so prevalent, I don't even look for them anymore. I just assume they're there. And I tell all my buyers, be careful what you say, because you may say something like, hey, Mike, how much would it cost to take down the wall and remodel the kitchen? And that kitchen may be something that they remodeled 5 years ago and think it's, best kitchen ever. So what's a good comment or question to you may be something that bothers a seller. I always say, you know what, why don't you write your questions down and ask me in the front yard away from the Ring door cam. Again, don't bring crowd when viewing the homes. Don't use the bathroom in any home you're viewing. A lot of people assume when they're in a vacant house, oh, I'll just use the bathroom here. And a lot of times the seller has shut off the water. So I always tell people, yeah, just, if you need to use the facilities, we'll stop at a Starbucks in between houses. Okay. All right, so we're inside the property and you decide you really like the property and you ask me, Mike, can you get the disclosures, which are all the inspections for this property so we can review them? We really like it. I say yes, but since you like it so much, let's take another walk through. Let's open and close, turn on and off, see how everything really works. We probably went through a little fast the first time. And so we walk back through the house and we test everything. And we're just doing more of a hands-on, a little more time in the property because you think you might write an offer. It's really good to do. Okay. All right, comparative market analysis. How do we determine the true value of this home? Now, it doesn't look pretty here, but that's just because we're looking at the activity going back 90 days in this neighborhood that we're looking at. So you're going to have active listings, pending listings, which means they're under contract and they're going to close, but there's no pending at this time in this neighborhood. And then we have sold listings. Okay. So obviously we're looking at the top one, which is Shoreview Avenue. It's a 3 bedroom, 1 bath, 1,000 square feet, and it's listed at 1,258,000. Okay, great. So we know that behind this, you're going to be sent maps showing you where every property is located. So you can see if it's a busy street, a quiet street. You're going to see how big the lots and the photos of the sold homes, which are down on the bottom. So you can compare them to the active home on Shoreview that you're looking at. So let's go down and look at the sold ones. They're all 3-1s. They're all in the same neighborhood. So they're all going to be the same builder. Lot sizes are anywhere from 5,000 on the low end to 6,100 on the high end. And we've got sales prices all the way over to the right on the bottom from 1,210 to 1,600. So we're going to look at all the photos, look at where they're located, and we're going to compare it to the one on Shoreview Avenue. And there's going to be a high sale, a low sale, and everything in between. And we're just trying to match it to one that has recently sold. And if we can do that or get pretty close to it, we know this house is going to appraise. Okay? All right, so California purchase agreement. Best time to review a purchase agreement is before you ever start looking at property. So you always want to ask your agent for a sample purchase agreement so that you can review it prior to looking at homes. If anybody would like one, go ahead, shoot me an email, and I'll be happy to send one out to you. There's two types that are mostly used, CAR or the PRDS. They're both good. No complaints about either one. You want to make sure you have the most recent revision date. You can ask your agent about that. Broker review. If you're working with, say, your sister-in-law, she just got a real estate license, she's never sold a home, that's fine. Just make sure that she has someone who's mentoring her. Usually it's a training broker in the office, and they've reviewed the purchase agreement. And at the bottom right, far over on the front page here, they'll say reviewed by, and they'll put their initials there. Then you're going to talk to your agent about contingencies. Do I want an inspection contingency so I can inspect the property because I didn't like their inspections or they didn't have any? That means I'm making this offer contingent upon me reviewing a new inspection. Financing contingency. Do I need to have a contingency for financing? No, because Norm is doing your loan. So you don't need a financing contingency. You're going to be fully pre-approved. Lastly would be the appraisal contingency. Norm had mentioned early on about it must be appraised at the contract price or higher. If it's lower than that, then all lenders will look at the lower price. So if you're going in at $1 million and it comes in at 980, someone's got to make $30,000 up. Seller comes down 30,000, you go up in your loan amount 30,000 or cash 30,000, you guys split it, up to you. But if you have a appraisal contingency, then you can say it didn't appraise, either lower the price or I'm backing out. Now, you have all these options for contingencies, but I will tell you, this requires some more explaining from your agent, that the vast majority of homes sell with no contingencies. Okay? All right, the offer process. You and your realtor will decide what to offer based on the market analysis, discuss possible contingencies in your offer. Your realtor will present the offer. The seller will respond by accepting, rejecting, or countering your offer. You can accept, reject, or counter the seller's response. So you're going to have this discussion, and this is going to be the process on every property you make an offer on, okay? Finding the right real estate agent. Well, let's just quickly go through this. If you want a real experienced agent, ask your family, friends, coworkers, so forth, if they have anybody that in mind. First question you want to find out is, do they work the geographic areas that you're looking in? How many transactions did they have last year? In other words, are they full-time? And how many were buyers and how many were sellers? And if you are a first-time home buyer, ask them, do you have time for me? Because I'm a first-time home buyer, and I know first-time home buyers are very, very, very scared, and they should be. They want to know everything. So you're going to have to spend a lot of time with them as an agent. And if they don't have that time, a good agent will say, I don't have time to take on a first-time home buyer right now. So you got to ask. And then during your meeting, you establish your goals, like how soon you want to buy a house, or your trajectory, determine a strategy for meeting up, develop a timeline to revisit the search criteria. Okay? All right, once your offer is accepted, everybody goes to work, okay? You have insurance people, you've got Norm, you've got your real estate agent. It could be inspections, could be repairs. There's a lot of things going on, okay? And where are you in this? You're at the top. You're the CEO. Like any good CEO, you have no clue what's going on, and you have to depend on all the worker bees down below. And that's us. And we're going to be talking to you, sending things for you to review, explaining them to you. Average close of escrow is about 30 days. Could be sooner, could be longer. But that's what's going to go on. Just a lot of documents being reviewed by you, everybody doing their job. And then we get to the end, sign off, and you're a homeowner. Okay? And that's what my computer looks like on most days. I wake up and I look at escrow task list, and it tells me, you can't really see it here, but what needs to be done, how many days do I have left to do it, who's responsible for signing, who's reviewing, who's doing any part of it. And that's all these one-line items going down. And I'm sure Norm, and yeah, he's got the same thing. So it's just a matter of pulling it all together. It's going to be really easy for you because we will spoon feed you everything. Okay? Hey, just shot Real Estate 101 through a fire hose at you. I hope you guys learned a little something. I certainly did appreciate Norm explaining all the loan processes, and Provident and Norm are wonderful. I highly recommend you reach out to him immediately. If anybody would like a real estate referral to anywhere in the United States, I pay for a service that I have everybody's background. If they're a licensed realtor, I know what their specialty is. I'd be happy to give you those names. Norm.
Yes, sir. Thank you, Michael. That was outstanding. Thank you so much. Amanda, do we have any questions?
I do not see any questions.
We're too good then.
I guess.
There's our contact information. Always feel free to reach out to us in the future with any questions. Oh.
Sorry.
Oop, oop, oop.
We're replaying it for you guys. Oh,
There we are. So please feel free to reach out to us with any questions. We're happy to assist you.
And thank you so very much for spending the hour with us. Hopefully you got something out of it. And I know you have. And as I said, Michael's outstanding. He's been around for a long time, real estate agent and very experienced. So thank you for your time. And thank you, Michael. And thank you, Amanda, for manning the board.
Thank you, Amanda. Thank you, Norm.